We're going to get into the next panel, the revolution of tokenization in ownership and transactions. We have Miguel from Digital Custody at GmbH, Barbara from DWS Group, Sebastian from Tradias powered by Bankhaus Scheich, and Christoph from Union Investment, moderated by Moritz from coinIX. Please welcome them to the stage. Big round of applause.
Sit according to your... All right, Barbara and gentlemen, let's talk tokenization. Maybe we have a just very short intro where everybody explains who he is and which organization he or she is working for, and maybe we start with you if you manage to get the mic. Just try.
Should I just start otherwise? Yeah. My name is Sebastian Heiler. I'm here from Tradias / Bankhaus Scheich. We are a German trading bank focusing on classical assets, but also on digital assets. We were one of the first German licensed trading banks to step into the digital asset space in the market making sector already in 2018. And expanded that a year after already to the tokenization market, providing infrastructure and also secondary markets. But I think that's a point that we will elaborate on a bit later.
Definitely. We have one microphone on it, or is the other one
working? Yeah. So, hi, Miguel. I work with Hauck, Aufhäuser, difficult name. I know HAL for friends. We're a private bank in Frankfurt. I run custody, so we do wallets for our one-stop shop in crypto assets. It's both cryptocurrencies for funds mainly, and also for crypto securities under the German law.
And I'll continue. Hi everyone, my name is Barbara Schlyter. I work at DWS. We are a large international asset manager with around 940 billion assets under management. I work at Xtrackers, which is our passive brand, so our ETF and ETC brand, and where I'm responsible for our digital products. So we just launched 2 crypto products, Bitcoin ETC and an Ethereum ETC.
Thank you for having me here, Christoph Hock. I'm heading tokenization and digital assets at Union Investment. Also like DWS, one of the TradFi companies here represented. And yeah, literally for about 10 years on the topic of blockchain, with intensifying our efforts since 2018, 2019. We've had a number of use cases when it comes to tokenization of assets, and from our perspective could be a disruptive element, the entire token economy for the financial industry. And that's why on the one hand, obviously, we try to set up infrastructure in-house to serve our clients in the best way. But on the other hand, it's also important to collaborate with all the stakeholders here to build token economy and to create here competitive edge in Europe, especially versus in the Americas, where unfortunately lots of the technology themes we've lost to these guys, but at the moment I'm quite comfortable that we're going to make it here in Europe.
We will make good for that, definitely. So my name is Moritz Schildt. I'm here in my capacity as a board member of the Bundesblock, Bundesverband Blockchain. Simultaneously, I'm one of the board members of the Hanseatic Blockchain Institute. Some of you may have heard about it. And then I'm running a company called coinIX. And I'm very happy to talk about tokenization because we just tokenized fund shares in Germany, which is cool to see on your wallet that there is not only coins, but you have a financial instrument that has been sent into your wallet. Let's talk about tokenization, and in our preliminary talks we felt it's still very early. And on the other hand side, if we look back, I remember back in 2014 talking to the German BaFin about investing in crypto, and they were very, very reluctant. And then I remember a few years later there was this BaFin event in Berlin where Christoph was mentioning that BaFin has realized that there are token issuances, and they tried to distinguish between utility token, and they felt like, okay, everybody can do utility tokens, we don't care. And then very German approach, that's the WPA der WPE-Token with the German R with 2 dots on it. Das war der wertpapierähnliche, similar to securities token. And they said, all right, if there's a token that falls in this category of WPE, and everybody said, okay, we don't do it, we only do utility tokens. And then more and more, BaFin has become to be more approachable, more open, and particularly with the event of MiCA, more and more of the tokenizing issuers or token issuers felt, well, maybe it's not the right way to try to be below the radar, but let's try to have something regulated, something the BaFin likes and so on. And what we see now is that more and more issuances of digital securities, elektronische Wertpapiere, and interestingly, particularly you, Union, have started to say we believe that this is the future and we want to be open for that. On our panel today, we have an interesting mix because we have two enablers, so to say, and we have two consumers of these instruments because you are where the money is and you have the investors that eventually use these instruments. Maybe starting with you, Christoph, I just learned that you have switched your job and now, since the beginning of this year, you do 100% digital assets, which is a move for your employer as well to say, Christoph gets out of the classical traditional business and focuses entirely on digital securities. This is an indication that institutional money wants to open up for everything that's in the digital area, right?
Yeah, absolutely, and I think it's important to have the backing from our board, actually, because when you want to build business, you need headcount, you need budget, you need money to build it. And obviously, you need the green light, the go from your top management. And that's what we've set up, what we got about 9 months ago. Prior to that, we were very much bottom-up driven, meaning looking at our business units in portfolio management, we were focusing on blockchain technology. Our IT guys, they had some projects running. Our marketing team was on this topic. But what was missing really was the kind of umbrella, so to say, from a top-down perspective. And that's what we've set up right now, underlines the importance. We've had board meeting, this was in October last year, where our what we call mission digital was finally defined and approved, and blockchain DLT is this one key area. And maybe you mentioned, Moritz, do we have a slow adoption in this context? And I guess looking from a helicopter perspective, going back into history, we've had most recently the 35th birthday of Web 1.0, the internet. And looking backwards, at the end of the 80s, beginning of the 90s, we've had also fairly slow adoption. People were questioning, why on hell do I need the internet? Why do on earth I need to receive emails? I've my daily mail in my letterbox, and why should I consume information electronically? It took ages to get the pipes to the internet, to get the wire modem up and running, which was highly unstable. And then 5, 6, 7 years later, it was well accepted. And also when looking at Web 2.0, platform technology, social media, we've had similarities. So when Amazon was founded, first selling books online, it was also questioned. I have a bookstore, bookshop next around the corner. Why on earth should I purchase books online? When Facebook...
You personally, did you start very early to use Amazon because
absolutely.
you are the digital nomad?
Absolutely,
okay.
made life much easier. When looking at social media, Facebook, They IPO'd the company in 2003, and after the IPO, the stock crashed 25%. Everyone was asking how will Zuckerberg monetize what he has set up. Today it's a $1 trillion company. And I see similarities to Web 3.0, token economy, what we are talking right now. Again, a fairly slow start. And what's missing in token economy is the kind of ChatGPT moment, so that people realize that it becomes visible, the impact
that's
of
the question,
token,
how we get to mass adoption.
Yeah.
I think that's something we might touch on on the later stage. From my perception, even though DWS and your company are amongst the largest players in the investment field, the approach has been slightly different because you were much more focusing on digital securities, whereas Barbara, DWS, from my point of view, started much more to enable investments into digital assets as Bitcoin and ETC, to have them in the funds, and has not, even though I've seen your study about the relevance of crypto assets to improve an existing traditional portfolio, you are not yet into digital securities, elektronische Wertpapiere, to have them in your portfolio. Is it right that the path has been slightly different? Please explain a little bit more in detail what the DWS is heading to.
Yeah, I would say so. I would say the common ground is that both companies recognize that digital assets is for us a strategic topic, the power of the inherent properties of blockchain technology, but then we do share that same vision of what the financial market might look like in 2040, in 2030, right, in many years. But the question is, how do we get there, right, and what can we actually do today? And we've very deliberately took a long time to discuss what are the different optionalities and what do we want to do today to get to that vision, right, because we tokenizing the financial markets is something that the market has to do together, that many of the infrastructure providers have to do, where we as an asset manager are often, as you described in your introduction, a consumer, but maybe not just the enabler. So we actually took two decision criteria to decide on which use cases we want to focus on. We said market readiness must be a key criterion, right? If we say tokenization of real estate is the biggest use case, that's great, but we can't alone drive that. So we have to see, is the market ready to drive that particular use case? And then also core strengths, right? We are a large established company and we should not see that as a hindrance, but actually as a key enabler to use that expertise that we have in the traditional world and that we can leverage these expertise and skills that we have from the traditional world. And based on that, we as DWS identified 3 core digital asset use cases that we are prioritizing. The first one was very clearly crypto.
Yep.
We invested, I think, 2 or 3 years ago for the first time as one of our mutual funds into cryptocurrencies indirectly via crypto ETCs.
Yep.
We just launched, as I mentioned before, our own crypto products a couple of weeks ago because we said that's by far the largest market where we see client demand both from the retail and institutional side. We offer access across all major asset classes, across also alternative assets, we just said it's here to stay, cryptocurrencies, and we also want to provide access to cryptocurrencies. Second use case are stablecoins, and that was quite bold from us, I would say, because stablecoins are more of a payment product, right? And as an asset manager, you offer investment products, not payment products. But we said this is by far the largest tokenized use case today, right? Stablecoins have a market cap of around 140, 150 billion US dollars, right? So a sizable market, much more transaction volume actually. And we said, what are the key strengths that you need to be successful in that use case? And one is trust, right? To be a regulated, trusted provider that then manages the collateral for that stable coin. And that is one of the key strengths that we have from our traditional business. And then besides cryptocurrencies, first use case, stablecoin, second use case, the third use case is tokenization. And that was very early on the first one we identified, right? And where our board was directly behind it and said, you know, this is something we believe in the technology and into the tokenization of assets, but where we also very deliberately said it's a slow progression that we've seen over the last couple of years, right? We certainly don't want to miss the train. We want to enter at the right time and with the right use cases, but we can't do it on our own, and the other two use cases are just more progressed, and therefore we're prioritized as well.
Before moving to the enablers, I found quite interesting that both of you mentioned that your board was into that. How about investors' appetite? I could imagine that within DWS there were fund managers that really said, we need this exposure to crypto, whereas your investors, did they tell you, could we have digital format of bonds in our portfolios? Maybe you start, was it seeking demand for enabling crypto as part of portfolios?
Yeah, cryptocurrencies and TradFi are always in a very emotionalized discussion, right? There's very big critics that say, you know, there's no inherent value, we should not do this, and there's very big optimists that say, you know, this is the future of finance and we would be stupid to miss that train. And the same, I think, you can probably find in every larger TradFi company. But for us, it was really we did see demand from our portfolio managers, especially on the multi-asset side, to start investing. I mean, small allocations, right? But we also saw demand from our clients, from our distribution partners, right? So, for example, on the X-Tracker side, we partner a lot with digital distribution platforms, with neobanks, neo-brokers, where cryptocurrencies has been integrated already, right? Where it has already been a big topic for years, and therefore it was very natural for us to say, you know, this is a growing and already large established asset class. We want to offer access here as well.
Christoph, it's the board or it's the clients?
No, obviously it's clients. So we are a humble service provider for our clients, and institutional clients, and they were knocking on our door asking whether they can invest in their fund vehicles into tokenized bonds. So this was one use case, and therefore we chased this topic internally. Most recently, some of you might have seen it, German KfW, so that's the biggest bond issuer we have in Germany, with about issuance of 95 billion euros on a yearly basis. They announced that they will launch in about 6 weeks' time tokenized bonds. This was one of the projects where we've been working with KfW for the last 15 months on. But then also when looking at cryptocurrencies, we see client demand. About 2 months ago, we launched a blockchain fund where we have an up to 15% allocation in cryptocurrencies in there, and we just said it's a project. We put it into our shelf, and when clients are interested, they can happily invest in. And within the first couple of weeks, we've had more than 50 million euros demand from retail investors.
That's cool.
Also, when looking at DZ Bank, our holding company, they've also strong demand in cryptocurrencies from retail investors, single investors.
I mean, all of you are representing
demand,
early adapters, and let me move over to Miguel, because you are representing the custody side somehow. However, your employer has been the second in Germany to receive the formal crypto custody license. Initially starting holding Bitcoins and Ethereum, and now more and more getting into a role of being the responsible custodian for a multi-million issuance of a bond. Is this proof of concept? Is it getting big now, or what's your impression?
I think for the size that we have more humble bets maybe than the two gentlemen and lady that we have here. And we have a mixture of strategic movements and opportunistic developments. The acquisition, Hauck bought the custodian inorganically, so it was an inorganic growth. And the idea that we had back then would be, let's set up funds and let's set up the whole value chain with 100% cryptocurrencies. Right? There are limitations to offering those products at the moment. Obviously, you can only offer it to institutional investors, which may be looking at the news, maybe something that might be reviewed at some point soon, which would be nice, because the gray market is very big, offering more structured products that are not the physical asset. And then, obviously, the Electronic Securities Act came out, and that was very interesting, and it made a lot of sense for us, a bank offering products for, so bespoke banking for high net worth individuals, but mostly also being a one-stop shop for asset servicing. So that was the angle, that was a double angle that we had. I think when we look in the pipeline, I think maybe we're a step ahead of everybody else in that we have set up, running up an infrastructure for 2 years already for funds holding cryptocurrencies. So we've learned a lot from that. We're expanding that learnings to external customers, external mancos as well. And also from the point of view of electronic securities, I think this is very early stages. And what we're investing in at the moment really is now, how do we get past the issuance into the things on the normal asset life cycle that come after you have the issuance. So that's really the focus at the moment. So it's still early stages, but that's very, very important. And there's, it's hard to look at it without having mixed feelings as well. It's like cryptocurrencies. Depending on how the light shines on it, you may have a mixed feeling. For me, the magic moment was really when you had a transfer going from one depository bank to another depository bank, and that was just a blockchain transfer.
That's
right?
cool, yeah.
Without going through a CSD. And that's kind of magical, because usually you have a lot of steps between the way. But the product in itself, or the asset in itself, it's rather dumb, because we have to get everybody up to speed. But that was mostly the
That's interesting that you mentioned that, because I was asked earlier what was my magic moment, and I had to say the first trade on a DEX was entirely new for me, because if you're used in traditional finance that there is a counterparty and then you send something into a smart contract and it does beep. Sebastian, your employees' approach to this is entirely different. You started from a more trading perspective, then very early did a tokenization of a mutual fund, if I remember correctly, which was a digital twin that was tradable 24/7, which was an interesting proof of concept at least. So what's your take on tokenization, and what's your vision?
Yeah, so our vision comes a bit more from the traditional trading side.
Yeah.
And also we are quite opportunistic market driven, right? So we don't go out and invent products that we try to force onto the market, right? But we listen to the market, see what is tradable, or what is a product which is accepted in the classical world, and then try to transfer that with added benefits into the tokenized world, right? Because in the tokenization, I think you have to be really realistic about the added value that you give to the investor and to the user. And the added value doesn't only lie in tokenizing an asset, but it must be a quality asset, right? Just by tokenizing it, it doesn't get any more attractive.
You don't improve the asset by tokenizing it.
Yes.
No, I mean.
And so that's what we did. We were one of the first in Germany to issue tokenized shares. Back in the day, you didn't have the EWPG, so it was a tracker certificate representing a share on-chain. As you mentioned, we set up our own mutual fund, actually. So we did the asset management side of fund of funds, representing sort of thematically themed investments like an ETF structure, tokenized that and made it tradable 24/7. And that's also what we concentrate on. We had a lot of use cases from real estate, from collectibles, art, but also green energy or corporate bonds. That's a bit our core business, corporate bonds. But we don't concentrate in the issuance and the placement. We focus on giving liquidity and secondary market infrastructures, right? And that's what we currently did. We issued a money market fund, a tokenized one in Germany. And then looking at the sides, it's not only the customer side, but we also partnered with AGI, Allianz Global Investors, which do the fund management.
Yeah.
We did the tokenization. And by doing that, you have a product, right, which is tradable 24/7 and allows you to also manage your liquidity from a treasury perspective, for example, right?
Yeah.
Do intercompany payments across borders in real time, at the same time earning some interest on your actual payment, which is quite a unique use case.
I think we all agree that there are lots of advantages.
Yes.
However, which are the ones that will really help to get mass adoption is still an unsolved question. One single question to each of you. We have seen about 100 issuances of digital securities so far. Starting with you, Miguel. Which is the one you feel is the most interesting, your lighthouse project in digital securities?
Well, internally, obviously the Siemens bond, but from the point of view of inspiration, it was really what SocGen, Société Générale did. Issuing a bond and then going and working with MakerDAO to do a refinancing. That was really, for me, it was an inspiring moment because it changed the perspective with which we can actually look into DeFi, irrespectively of how DeFi is actually operated. So that was really the...
All right, not your own product, please.
We didn't issue a tokenized bond, so. Yeah, I would have, that's a good one. Another good one was in 2021 when the European Investment Bank issued a tokenized bond on the Ethereum blockchain. And what was special about it was that this is totally a product that asset managers like us normally invest in, right? And especially the European Investment Bank as a very institutional type of issuer, issuing on the public Ethereum blockchain was kind of a stamp of approval for the technology.
Yeah, I would not only look at the product side, right? Because we see a lot of classical products getting issued, but also on who is the issuer. So for me, it would be, for example, the issuance of BlackRock with their money market fund, because that really shows a pivotal moment, right? Because where does adoption take place? When institutional money come into play, because they have the means to really move it. And as soon as we see, for example, JP Morgan with coinIX, BlackRock with their money market fund really moving in a tokenized version, not only digital asset, but tokenized fund version and world, it's really hard for the smaller banks to deny the progress.
Yeah. Christoph, what's your lighthouse project?
Number of lighthouse
Only one,
projects.
only one.
One to mention, Barbara, she was alluding to the iBond, which was our first public investment in these type of products and the kind of moon landing on our side. But looking forward, what will be, from my perspective, most important is our central bank's exploration phase, which started this week, where we, for the first time, will see with a number of issuances in the combination of assets on chain and cash on chain. And to have all the synergies, lower cost, higher speed, less risk, it's essential to have assets and to have cash in a combined way, and quite comfortable that the ECB might come with a wholesale central bank money, wholesale digital euro somewhere next year or the year after, and that's for me really the kind of iPhone moment for our industry.
iPhone moment. Let's take a few more minutes to look into the future. What needs to be done? What are the obstacles from the technical side? Custody, everything is ready, or what is your perspective? What can you support to get mass adoption?
I think if we want to have mass adoption, this is a team game, right? So it's not something that one entity will able to do it by themselves.
Yeah.
And
do you feel that there is a collaboration within the German financial industry, or does everybody do his or her own?
Definitely.
Yeah.
From my perspective, there's the issuance. All of the issues that are happening are helping. Increasing the water level, and then when the tide rises, everyone's boats will float better. So I'm happy with every issuance that occurs. I think we're still struggling a bit with not with the physical asset by itself, but how to do the connection between the physical asset and the right. So when you look at the electronic securities, for example, there's still a lot of nitty-gritty detail. There's a lot of discussions with lawyers on how to do the issuance alone, holding, and then when we move on to the life cycle, it will be interesting. So we need a bit more standards. Standards that are helpful from the technical side. So not what functions for a bearer asset doesn't necessarily function for a financial asset. And then we need to find a way to synchronize the rights with the physical asset by itself so that we can leverage the benefits of having a standardized interface for transferring the assets, irrespectively of whether if it's an NFT or you know, a utility token, or maybe something which is much more complex, like a fund share. So I would say the standards, and first and foremost, the harmonization of what is being regulated with what is actually some regulation that can help, you know, moving the needle forward.
Okay. Barbara, continue with you. What would be your iPhone moment? What needs to happen for you to think now it's getting really mainstream?
I think we need to find the right use case for tokenization to trigger that mass adoption in the regulated financial industry. I don't think we've found it yet. I think we've seen great proof of concept, great first projects, a lot of innovation happening across different asset classes. We've seen it in alternatives, we've seen it in the liquid bond market, but we haven't really seen, besides stablecoins, any asset class that really is tokenized and then scales. And I think we have to find the right use case where a number of different parameters line up. We need to find a use case where the technology is ready to support that use case, where the regulation is ready to support the use case, and then where we see across the fragmented value chain in the financial industry that the different service providers are ready to support the use case, right? So, for example, custody was mentioned a couple of times, right? We have great crypto custodians, we have custodians offering custody for tokenized securities, but then it's really also the very large players in the industry need to start integrating these solutions, right? So if we have a fund that wants to invest into a tokenized security, it's that fund's custodian that needs to be able to offer the custody, or they need to appoint a sub-custodian, which is quite cumbersome. So I think it's really then finding the right use cases and then making sure the technology, the regulation, and the value chain support that use case.
Looking into tokenization and digital assets, it is a way to invest in something without an intermediary, without a bank. Is it a threat for these traditional providers as DWS as well, or how would you look at it?
Yeah, it's a good question. It's a question we often get, right? Isn't the whole idea to decentralize everything, right? To think about DeFi, and why would we then need all of these intermediaries that are sitting here on this panel? And the question is, yes, blockchain is a decentral technology, and there's values emerging from that property, but then there's also a lot of benefits with centralization, right? Decentralized systems are not inherently more efficient, but it's often actually centralization that leads to efficiency. So I think we have to think really hard about combining the decentralized component and the centralized component. Where does it make sense to have decentralization, and where do we want to stick with centralization? So I do think, you know, certain aspects of the traditional financial system might become void, but most of them will just change. And I think we then, as incumbents, our task is to think about how do we adapt our business model. While it won't be maybe one-to-one what we do today, there's new opportunities emerging. And then particularly when it comes to asset managers, we offer highly regulated products, right? The regulator is interested to protect investors when they invest into our fund structures, right? And therefore, it seems odd to me that there wouldn't be a central party anymore that the regulator can also, you know, make sure follows the regulation and can go to if something goes wrong. So I think it's, while, you know, how we do things might change, it's that a centralized intermediary will continue to issue asset management products and manage funds that will remain the same.
Christoph decided to grab the microphone because it's a threat for you.
No, it's an opportunity. As Barbara was saying, I guess when being open-minded, when being innovative, as a TradFi firm in collaboration with fintechs, with speedboats, you really can create going forward significant value for your clients. And I'm sure when sitting here in 5 years' time, we won't talk about tokenization anymore, because 80–90% of our assets will be tokenized, and this will become the kind of...
In 5 years, 80%.
The kind of...
we will remind you in 5 years.
The kind of new standard. So I'm a strong believer that we might see a hockey stick event, or hockey stick events coming up over the next couple of 6 to 12 months with secondary market tradability, with cash on chain, i.e. stablecoin, wholesale central bank money. We have MiCA kicking in. So plenty of catalysts from our perspective. And as a TradFi, you can either do the right things and come with new offerings. So token can deliver much more than a stupid pile of paper, which is today the traditional form of securitization. Just to mention smart contracts, to trigger payments, is it coupon payments, is it dividend payments, is it reporting? So humongous opportunities, and so to say, you either can fuck it up like Nokia did about 15 years ago, when they were too arrogant, saying we are too big, no one really can challenge us, and they gave a laugh about Apple, and 2 years later Nokia was dead. Yeah. And I believe exactly the same happens in the financial industry, when really like a DWS, like us, when really being proactive, when really collaborating to build.
Who is Apple and who is Nokia? The two of you.
Token, we are both Apple. So it's really about collaboration. It's not about competition. Yesterday I was participating at a digital asset conference in London, and the key message was collaborate, but don't compete at the moment. We have a humongous chance to build here token economy, to reshape the financial industry, and that's the role we as asset managers we are in. That's the role where you guys as custodians are in. Tremendous chances and plenty of opportunities for us in the TradFi industry to serve our clients in the future even better than we do today.
We have to get to an end, but you touched secondary markets, and that is the final question I would like to get to you, Sebastian. There is currently no existing secondary marketplace in the German market for digital securities or for elektronische Wertpapiere. And Bankhaus Scheich has had an approach to be the trading facility. Is this your segment of this market, or what do you think, who's going to make the money eventually?
Yeah, that's a really good question. It's a yes and no answer, actually.
Perfect.
So there are secondary market infrastructures for security trading in place in Germany. Also besides the EWPG, which then offers crypto fund shares, we already had MiFID II actually covering a security token, right? Issuing as a security in its own, security has its own kind, governed by MiFID II and the German Securities Act. And what we do is we have a phased approach to that, because we think adoption does take place, maybe in a hockey stick moment, but probably not tomorrow, maybe next month. So secondary markets are currently in a little workaround, right? So what we do is we act as a market maker, as we would normally do for exchanges. We currently then don't use an MTF for the listing, but we use neo-brokers or other distribution channels, like your normal investment app where you currently buy your cryptos. We expand the offering so you can buy cryptos and equity-like products, right? So just to diversify, because that's where we think the value lies, right? Just reduce complexity. And how is that done? Currently via an OTC trade and a financial commissioner, replacing the matchmaking that you would normally have on an exchange. And I think that's what we're gonna see with the DLT pilot regime. It's a good question, maybe also coming back to your question, doesn't it really take away our purpose? Yes, in some cases, no in others. That's what we also currently see with exchanges, right? So an exchange is actually designed to also do the matchmaking and the order books for investors and for shares and bonds. Yet you see a lot of exchanges with quite a lot of market makers, for example. Yeah. Why is that? To provide initial liquidity, to regulate prices also across exchanges. This will be important, especially for bonds and shares, right? So you don't have arbitrage between them, and also to make it a bit easier for the asset management side with the inflows.
Yeah.
And then that's what we are currently building right now in the first step with our own solution. So our secondary market, where we as market maker and OTC trader are the market actually and the liquidity.
Yeah.
And in a second step, where we want to connect, and that's what we're working on, connect as many marketplaces as possible, also with each other, to really build the ecosystem. Because I think that's the important step, right? So you don't want to have just new technology, but you want to have new technology that adds to existing infrastructures, right? Especially then if it comes to settlement.
Yeah.
And
Pretty cool. I mean, I mentioned earlier that back in 2014, the German BaFin was saying, no, never will we permit something that has to do with crypto and digital assets because this is out of range. And had I told the ladies at that time, totally get your fingers off it, that 10 years from then, we would sit here with people from Union Investment, from DWS, and from two renowned banking institutions that are still the very early adopters. I think this panel really represents the four most innovative organizations in this particular sector in Germany, and I have to thank you. That was quite interesting to understand your different approaches, entirely different, and eventually we need to figure out where in this new business the value is added and where the value chain permits to extract a little bit of the value and who makes the money. I've no clue, but I wish us all the best. Thank you for listening to us. Thank you, dear panelists.